Welcome to Iraqi Dinar Update, your go-to source for the latest news, expert insights, and real-time developments on Iraq's currency, economy, and financial reforms. Whether you're a long-time investor or just curious about the dinar, you're in the right place. The financial health of Iraq, particularly regarding its foreign exchange reserves, has been the subject of discussion and some public concern over recent months. However, according to Mufti Mohammed Saleh, a key economic advisor to Prime Minister Mohammed Shia al-Sudani, the situation remains stable and under control. Saleh offered assurances to the public and financial community that Iraq's foreign currency reserves are fundamentally sound and that the Central Bank of Iraq, CBI, continues to manage the nation's monetary stability effectively. In his remarks, he emphasized that Iraq's reserves possess sufficient strength to cover 100% of the national currency currently in circulation, which is a critical benchmark of monetary security and economic credibility for any country. This statement carries profound meaning because when a country's reserves are large enough to fully back the amount of domestic currency issued, it provides confidence that the government can maintain the currency's value, resist sudden speculative attacks, and meet any external obligations that arise. Such coverage implies that the Iraqi dinar is not being overissued relative to the actual financial strength of the country, thus mitigating fears of inflationary pressures that can stem from an unsupported money supply. Saleh's comments also touched on what he described as the achievement of commercial efficiency in Iraq's financial operations, a term that deserves deeper unpacking. Commercial efficiency, in this context, refers to the improved ability of the country's financial institutions to carry out external and internal financial transactions smoothly, with minimal leakage, bottlenecks, or distortions. It signals progress toward a more open, streamlined, and internationally integrated financial environment. In simple terms, it means that Iraq is becoming better at using its foreign reserves to facilitate international trade, regulate its own monetary supply, and support its banking system without waste or unnecessary losses. A country operating with commercial efficiency tends to enjoy more stable prices, stronger trade flows, a healthier banking system, and greater attractiveness to foreign investors, all of which are key components of long-term economic growth. Despite the decline, the fact that Iraq still has enough foreign reserves to fully cover its monetary base, the amount of dinars issued and circulating in the economy, is a sign of underlying strength. It indicates that the Central Bank of Iraq has exercised prudent management of its assets, resisting the temptation to overspend or overissue currency, even in the face of political and economic pressures. Maintaining full coverage of the money supply means that, even if external pressures mount or speculative attacks occur, the CBI is well positioned to defend the dinar without resorting to extreme measures such as capital controls, devaluation, or emergency borrowing from international institutions. Of course, challenges remain. Iraq continues to face political tensions, security risks, and the broader uncertainties that come from being situated in a region marked by volatility. The dependence on oil revenues remains a structural vulnerability, one that successive governments have pledged to address through economic diversification, though progress on that front has been slow and uneven. Nonetheless, the ability of Iraq to maintain a healthy level of foreign reserves in this environment is noteworthy. It reflects not only the residual strength of its oil revenues, but also a deliberate policy effort to insulate the financial system from shocks and to build a foundation for broader economic resilience. This approach aligns with international best practices advocated by organizations like the IMF and the World Bank, which have long emphasized the importance of strong reserve positions for countries in transition. It is also important to consider the psychological and signaling effect of Iraq's reserve position. In international finance, perceptions often matter as much as reality. When investors, rating agencies, and trading partners see that a country has robust foreign reserves, they are more likely to maintain or even expand economic ties with that country. Foreign direct investment becomes more attractive, sovereign bond yields remain contained, and the local currency tends to experience greater stability. Thus, Iraq's maintenance of full reserve coverage for its monetary base sends a strong positive signal to the global financial community at a time when trust and credibility are invaluable. Looking ahead, the trajectory of Iraq's reserves will depend on several interrelated factors. First and foremost is the price of oil, which remains the dominant driver of Iraq's foreign exchange earnings. Continued efforts to stabilize and gradually increase oil production, improve collection of oil revenues, and manage expenditure discipline will be crucial. Beyond oil, the success of Iraq's efforts to diversify its economy, through sectors such as agriculture, manufacturing, tourism, and services, will determine whether the country can reduce its vulnerability to oil price shocks over the long term. Additionally, the Central Bank of Iraq will need to continue strengthening its policy toolkit, enhancing its ability to manage exchange rate dynamics, support financial intermediation, and deepen the local capital markets. The move toward digitalization of financial services, expansion of credit to small and medium enterprises, and fostering of a more competitive banking sector are all key pillars of this strategy. These steps will not only help to preserve Iraq's foreign reserves, but also contribute to a more vibrant, inclusive economy that benefits all Iraqis. In sum, while a 10.18% decline in foreign reserves over the past year is a metric that deserves close monitoring, it should not be interpreted as a sign of crisis or impending instability. On the contrary, the broader context suggests a nation that is cautiously navigating the complexities of post-conflict economic rebuilding, gradually modernizing its financial infrastructure, and maintaining a prudent balance between necessary spending and financial discipline. Saleh's reassurances reflect an awareness of the importance of managing public expectations and maintaining confidence at a delicate time, while the underlying numbers indicate that, despite challenges, Iraq remains on a path toward greater financial security and economic normalization. Thus, the story of Iraq's foreign exchange reserves in 2025 is not one of alarm but of cautious resilience. It is a story of a country that, scarred by decades of war and instability, is now showing signs of the slow but steady progress that defines successful recoveries. And it is a reminder that in the world of economics, as in life, true strength is often found not in moments of easy triumph, but in the quiet, determined management of adversity. Thanks for tuning into Iraqi Dinar Update. If you found this content helpful, be sure to like, subscribe, and hit the notification bell so you never miss a beat on Iraq's evolving financial landscape. Stay informed, and stay ready. Richer if you want.